I want to go over volatility and margin requirements in these portfolios. You can see massive increases in margins. The day trade margins are at 50% for the stock indexes. The micros have no day trade margins, and some of these are up 200%. VIX, mini VIX, the energy futures. You scroll down here to the energy futures. Platinum is 200%. You still have 50% day trade margins on gold. Gold's still relatively low, surprisingly, but the energy futures 200% of initial. These are exchange margins, overnight margins typically, and trade station margins are 200% of that. And let's look at how that affects the portfolios. Here is the portfolio calculator. I've updated the margins. Now, I've updated the margin tab to not use day trade margins. The E-minis will use 50%, but the micros use 0, and sometimes the day trade margins go away. So I've eliminated, as of March the 8th, here's the latest list. In this column over here, you can see I eliminated the day trade margin because it's difficult to make this setup so that it shows the day trade margin for the E-minis and not the day trade margin for the micros. And the fact that the day trade margin goes away on high volatility days means you want to have enough capital to cover that. So the margin requirement for the micro 25 with all the new strategies, I've added the new strategies. Some of the strategies weren't in this list. And so once you add all of those in there with the full margin for the micro, the margin requirement is 35,420. That's if all strategies took a net position. So now you could just look at this and say that never happens, and the conservative number would say just trade this one micro per 40K. But you could say that, with 25K, you could trade with 25K because definitely not seeing all strategies take a net position at the same time in all the markets. And so you could trade one micro 25 per 25K, but the conservative number is 40K. And that is a massive jump from what we're used to seeing. We're used to trading E-minis. A few years ago, we were trading E-mini portfolios with 25K, and now we're trading micro portfolios with 40 and 50K. So big jump in margins. Let's look at our All Strategy 78, 500K. This is a 500K All Strategy Access 78. It was around 300K. If we take away the day trade margins, add the new systems, it's $1 million for account size required. The margin requirement is $1 million to trade all these strategies if they take a net position all at the same time. So they never do. You could be comfortable trading this probably with 500 to 700K, but the margins and the volatility in this market are off the charts. I can't emphasize that enough. I know that some brokers have lower margins. I think that a conservative broker is a good selection because it's easy to misuse margin and think that you can trade bigger than you really can, and it distorts the volatility in your account to have a small account with the kind of volatility that we're seeing in these markets. So you want to make sure that you're capitalized, not only cover the margins, but you understand that the volatility in your account, you're using leverage. And so if you do trade with a broker that has lower margins, be aware that the account volatility in your account is large and you're using a lot of leverage. So let's look at the rest of these. The old 50K portfolio, you need 180 grand to trade the old 50K portfolio now because the crude oil margins are about 20,000 per contract. And so this is just off the charts what we've seen. And the stock, the 200K, old 200K portfolio, $719,000 on the old 200K portfolio because margins have expanded so much. You can use day trade margins in the E-minis, like I said, but what happens on days when a lot of strategies trade and they get rid of the day trade margins? You're out because you don't have the capital. So to make sure you have the capital, and like I said, you don't need. I don't think we'll ever be in a situation where all strategies take a net position, so you wouldn't actually have to need this amount. 400 to 500K would probably cover this. So that's what I wanted to share with you on this video. The massive expansion in margins. You can see that in this tab right here. The day trade margins were 25%. Now they're 50%, but sometimes they take those away. So we're going with 100% on the day trade margins. And on crude oil, the margin was 58.30 back here. You see in 2017 it was 31.90. Kind of have a little bit of a history of margins here. Now we're at you're at 7 times the margin in 2017 because it requires 2 times the exchange margin. 23,100 per contract. You're going to trade 3 contracts of crude oil at trade station. You're going to need 70 grand just to cover margin. So that's how volatile this market is. And that is the latest portfolio calculator. I will upload this, and I'm also going to remove some of these because we didn't recommend them anymore, and so we're going to take some of these out of this primary list, and there'll be an updated portfolio calculator.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.